Today's podcast is brought to you by Pacific West Mortgage Fund, a full-service private money lender loaning on small commercial buildings in Southern California, specializing in Los Angeles, Riverside, San Bernardino, and Orange County. We do some lending in Northern California as well. Today we're going to be talking about purchasing your first commercial property. I have with me today my son, Patrick Granger, who actually is a first-time buyer. We're going to be walking through the process and some of the things you want to make sure that you cover prior to owning that property. Patrick, take it away.
Right. So today we're talking about the purchase of 18121 South Broadway in the city of Carson. We just closed on that last October, and now we're sort of in the process of doing the build out. It's really sort of a value add situation. The property had been vacant for well over 20 years, probably a lot longer than that. In the state that we bought it in, it didn't have any power, it didn't have any water, it didn't even have a functioning sewer connection. The roof was bad, it had people living in it. I mean, there was nothing really right about this property besides the walls and the price. And so, yeah, we've basically just been in the process for the last 3 or 4 months of building that out and doing the renovations to get it into a leasable or sellable condition, whatever ends up happening with it. And we're going to talk a little bit today about the process of what exactly that takes, although, of course, we are still learning that ourselves. In any case, I suppose the first step in this process was to identify the building. I know you've been tracking this one for a long time. You want to talk a little bit about that?
Yeah, so thank you, Patrick. I think that just to recapture some of the things. The podcast today is, what do you do as a buyer prior to the close of escrow? A lot of times people are so caught up on a lot of things with the purchase, and especially if you're a first-time buyer, you may not be thinking about all these steps because you just simply haven't done it before. Maybe you're relying on a real estate broker or somebody that's giving you some advice, and maybe they haven't been through a lot of these steps before. I've been doing this now for 43 years, and I've learned a lot of hard lessons by not doing some of these things. So the building today that we took on had been vacant for, as Patrick said, for almost 20 years. It'd been heavily vandalized, which is not an uncommon situation in Southern California. The reason that we were interested in this property, it was an extremely good location, and they say the bones of the building were very good. This building was designed to be broken down into 4 3,000 square foot sections. The building is 12,000 square feet. Excellent location, right near the 91, the 405, and the 110 freeway. So we liked the basics of the building.
Right.
What we were dealing with, of course, was that, as you had stated, Patrick, everything inside this building had been trashed. There was no plumbing, there was no electrical, there was no metal in the building. It had all been stripped out. It's amazing that people will work that hard to dismantle a building. I'm always astounded by that. But I want to walk through, and Patrick and I are going to walk through some of these things that you need to check off when you're buying a commercial building. So right. Patrick is really the poster child for the first-time buyer. This is the first. He's been in the business now for a couple of years, right? Doing brokerage. He's learning the business, and he and I are partnering up to buy this building. Again, the address on this is 18121 South Broadway in Carson, just north of Victoria. Please take a look at this on Google Maps. We're going to show you some pictures of what the building looked like when we first bought it, which we'll put up on the screen here.
Right.
But Patrick, let's start with some of the things that the first thing you got to do is find a building that you're interested in buying, right? So then the next step is?
The next step, of course, is the purchase and sale agreement. So you got to actually get it under contract. Of course, we ended up, getting a call about this building that it was going to be coming available, and so you go out and you meet the broker, you meet the owner, and per your recommendation, when we went out and actually met with the guy, we came with the purchase and sale agreement in hand. We had already known the purchase, what they were going to be asking. So ultimately, we gave them pretty much exactly what they were asking, and we showed up and said, let's do this thing today, basically.
Right.
So that's the first step. Right?
And that's an important one, Patrick, because I think a lot of first-time buyers are a little tentative about how to exactly do this. But if you show up with the purchase offer in hand, signed, ready to go, you come across as somebody that knows what's going on, right, that you're ready to perform, and that you're ready to buy this building.
There's actually, when we showed up, they had already gotten a verbal offer from somebody else and had said, well, if this person decides to go through with it, then they first come first serve. We're going to give it to them. And ultimately, fortunately for us, they fell through. And because we had showed up with the purchase offer, the owner felt comfortable just saying, okay, guys, get lost. We're going to work with these guys.
Right. So we came across as being on top of it, knowing what we were doing, and in a position where we were ready to go. Right. So if you're in a competitive market, that's a really important thing. There's two types of purchase contracts that are used in Southern California. One is the American Industrial Real Estate Association, and the other is the California Association of Realtors, which is the form which we ended up eventually using.
Right.
But just so you're familiar, there are different types of purchase contracts. And by the way, one thing that we had not, because I have a lot of experience in this area, but if you're a first-time buyer and you're not comfortable with these forms, get with a local attorney and review the forms ahead of time before you make the offer so that you know what's in these contracts, what you're comfortable with, what you aren't comfortable with, so that you appear as if you're educated. You don't have to know.
You probably should be. It's somewhat educated when you're filling out these forms, at least.
And most people are relying on a real estate broker to do that. But it doesn't hurt to spend an hour with an attorney just saying, hey, I'm out shopping for a commercial building. What do you think of this form versus another form? Do you think that there's anything that needs to be added? That kind of thing.
Right.
So without getting too far into the weeds, once the purchase and sale contract has been signed by the seller, because until you have the seller's signature on it, you haven't got a deal, right?
Right.
Then you're off to the races. So what's next?
Next step is, next step for us was an ALTA survey.
No, the next step was ordering the title report.
Of course.
Right. So let's talk about, you get the purchase and sale contract. It's signed by the seller. Then you've got the property under contract. Then you open escrow, you put your deposit money in, and then you order
title report.
Right. And what is a title report going to tell you?
Title report tells you any potential liens on the property.
Exactly.
The ownership structure of the property, if there's any debt on it, that kind of thing.
It's also going to tell you things that are important. Is the person you're buying the property from really the seller? You'd be amazed at how many times you get into one of these things and the seller is not who he represents. He says, well, I'm the seller, but in fact, he has to go back to a trust, and there's steps that he has to deal with. So a title report is going to say who the seller is, does the property have debt on it, are there concerns, exemptions on the title report that you may not be familiar with. There are easements on the property. There are restrictions on the property. The zoning isn't what you think it is. Those types of things. So the title report is after you get it under contract, the title report is the next step. And then there are a couple of steps immediately following that. So you mentioned the first one.
Right, an ALTA.
Okay, so an ALTA survey, American Land Title Association survey. If you are buying anything in today's market in a major metro area, you really shouldn't skip this process. It's going to tell you where the utilities are. Are there underground easements? Or do you have encroachments from your neighbors? By the way, if you're buying a single-family residence, our house that we purchased, I got a boundary survey done because I have been burned with people that have fences on my property, or the lot is portrayed as one thing and it's not, that type of thing. So these surveys are extremely useful. When you do get a survey, make sure you get a topographical map. This is going to tell you the elevation differences on properties. This is important for grading. Also, to keep in mind that American Disabilities Act, you can't have more than 3 or 4 inches elevation change on a parking lot, for example. So you may have to do grading on that property. Right. So that ALTA is going to be really critical. So the next one, Patrick, is...
The next step for us was environmental.
Right.
So one of the issues that we had with our property is that there was a hydraulic lift that had been in the ground, probably because there was some sort of auto repair situation that was happening in one of the units. So we ordered a phase 1, which we've talked about extensively in other episodes. You can learn more about that.
Just to interrupt you, we do have a podcast all about phase 1 environmental reports at pacificwestfund.com if you're interested in looking at those.
Right. So ultimately, there was a hydraulic lift that was in the ground that we had determined did actually leak fluid into the ground. And so we had to go through a process to get that cleaned up and make sure that we weren't going to have some issues.
And we have a picture of it being removed, right, which is on, you'll see.
You can see that. And so, fortunately, we I don't want to say we got lucky, but, there wasn't anything too insane going on in the property. Sometimes you get surprised by some large environmental problem, and if it's large enough, sometimes it's not even worth taking ownership of the property.
That's exactly right. And that environmental report is a process you cannot skip. Okay, if you're buying real estate, other than with the exception of maybe a single family residence, retail, commercial, vacant land, industrial, office, any of these things, you really almost have to have an environmental phase 1 report. Obviously, to move forward, it's got to be clean, and without going through the whole environmental process, you want to make sure you get that. It's really surprising how many people skip this step, and boy, it's a big one. You cannot avoid this one, especially if you're going to be dealing with a third-party lender, and you just don't want to take on the liability yourself. So in this particular case, we did the phase 1.
Right.
We found this underground hydraulic lift. It had to be removed. We tested it. We did some corings. We also made sure there were no underground tanks, that there hadn't been any uses historically. Remember, this building had been built in 1965, so there had been a lot of different tenants in that building over the period of time. So we wanted to make sure that we were dealing with a clean environmental situation.
Right. So one thing to always consider during these processes is that the purchase price is not the final price that you're going to end up paying for this.
Boy, that is so true.
That's particularly true in our case because there's, just all the work that you can imagine that would need to be done, had to be done. Electrical, plumbing, that kind of thing, particularly if you need to dig or put in a new meter or something, can get really, really expensive.
Right. And you want to make sure that when you're spending all this money, that you don't end up with something where you've spent hundreds of thousands of dollars, and all of a sudden you find out, well, I skipped a step, and now I find out that there's an easement across the back portion that I was planning on using for parking, for example.
Right.
That actually happened to me on a property, and I had an ALTA and I had a title policy that paid a claim on that, where we had bought something and we did the survey, we did all these things. What you're doing is making sure that when you go forward and spend your life savings on something, that you are in a position to actually be safe and secure with what you've got. So,
right.
So next on the agenda is
One problem that we had with this property, and that certainly the previous owners had, is that there was some extensive vandalization that had taken place. And actually, even when they were trying to sell this property, when they went and they put and this is, by the way, no fault to them at all. I mean, it's a very understandable thing to do. There was no power in the building, so they ordered a new power meter to be put on, but a new electrical box to be put on with a meter on the outside of the building. They didn't really have security in place. They did have a fence up, but it was just a chain link fence. It wasn't secure enough, and perhaps you can imagine within literally 2 or 3 days the power was gone again. So in these rehab processes, particularly in Los Angeles, you have to be really careful about how you're doing these things.
Right, exactly. But let's segue back to the things that you need to do as a buyer prior to the close of escrow. So what we're really talking now about is laying the groundwork so that when you go to the next step of spending money to refurbish the building or closing escrow and putting your business in it, that you're on solid ground, right? So we've covered the purchase and sale agreement, got to get it under contract. Then the next 3 steps would be the preliminary title report, the ALTA survey. By the way, those surveys cost about $15,000. They're expensive, but well worth it. And they take about 30 to 45 days to do. We have a relationship with a surveying company, but this is something that if you're getting into this, you want to make sure you have this issue covered. We also have the environmental reports. Those cost about $2,500, and they take somewhere between 2 to 3 weeks to complete. So you want to keep those timelines in mind. So we've done the preliminary title report. We've got our purchase and sale agreement signed. We've opened escrow. We've done the ALTA. We've done the environmental report. Everything is looking good. The next step now is determining, what's it going to cost to put this building back together. In our case, what we're doing is what's called a value add situation. We're buying effectively a shell. And now as the buyer, you have to think about how you're going to take title. How are you going to own this building?
Right. So what we did, like the vast majority of people who buy properties like this, is you form an LLC.
Which is a limited liability corporation.
Right.
It's a hybrid. It's almost like it is a corporation. It's not a C Corp. It's not an S Corp. It's specifically designed oftentimes to own single purpose assets like a building.
Right. So ours is really creatively named 18121 Broadway LLC.
Yeah, and Patrick, I just want to jump in here because I like to name my LLC things like Spotted Dog LLC or Flying Mimi LLC. Right. I'm a little more creative. Patrick shut me right down on that. I think that was...
I just try to keep it simple. See, the issue is once you get 2 or 3 of these things, somebody, the accountant will call you up and say, hey, what's going on at Spotted Dog? And you're like, what the hell is Spotted Dog?
A little creativity, and it gets shot right down.
So
anyway, we named ours 18121 Broadway LLC, California LLC.
Right. So it's a simple process. You form the LLC. You take title in it. There's certain kind of bylaws that need to be set for.
Okay, so just to drill into this exactly, when you form an LLC, you have an operating agreement as minimal. You're going to have register with the state of California on where you're the person that reserves service. An operating agreement, an LLC formation generally takes about 2 to 3 weeks and is going to cost you, they're not terribly expensive. They're going to cost you somewhere around $2,500. And don't forget, you're going to need a tax ID number when you do these because you can't open a bank account without a tax ID number. you're going to have to open a bank account in the name of the LLC, right? It's not going to be, Mark and Patrick's exciting adventure, a bank account. It's got to be under 18121 Broadway LLC. It's going to need its own tax ID number. They're going to need the operating agreement, and they're going to need what's called the Statement of Information. That is the LLC document that's registered with the state of California.
Right. So once you've done this, then of course that just leaves, I guess, where Pacific West comes into all of this is how you're actually going to pay for this thing.
Right. So the money, where's it coming from? So I think the reason that Pacific West is sponsoring this podcast is because for a lot of first-time buyers, you're just scraping up the money to try and buy one of these things. And, commercial real estate in any real estate in Southern California is expensive, but commercial property is particularly expensive. You're talking really entry level now for anything is, well above $500,000 to $600,000. That's really entry level. And for a lot of first-time buyers, they don't have $500,000 in cash for one thing, and they're looking for money and possibly financing.
Right.
And private money lenders are a very, very good source for a first-time buyer because they tend to be asset-based lenders. With Pacific West, we oftentimes will. We're more interested in dealing with first-time buyers, people that are trying to get their foot in the door, make their first purchase. So a private money lender is oftentimes a key step to getting your, getting
actually, in our case, we didn't have very much option because the building was just, even today as we're filming this, it's not in a financeable condition. Maybe, but it'd be
much harder.
It'd be a tough sell.
Yeah. One other thing prior to close of escrow that we haven't touched on is you're going to have to insure this building. So prior to the close, you're going to have to get fire and hazard insurance in place.
Right.
So, we've gone through all these steps. Make sure that you have an insurance agent working with you because you're not going to be able to close escrow unless you're buying it all cash. But if you have any kind of a lender or partners involved, you're going to need fire and hazard insurance, and that often can take 30 to 45 days to get.
Right.
It's not easy. So it's interesting you brought up this value add, where the building's just torn apart. Another reason that bank financing just may not be available for you. Another source of financing, by the way, that we haven't touched on, if you are buying a building that's in good shape and you're just going to move your business in, is a small business administration, SBA loan. There's several different types. One is called a 7A, one is a 501C, or a 501-4, I think is that what it's called. But these loans are designed for small business. You can do up to 5% or up to 95% of the purchase price they will finance. So that's a great source of financing.
They're very efficient. If you can qualify, I haven't worked with them a whole lot, but if you can qualify, then you have to come up. You don't have to come up with hardly anything. Of course, then you're paying interest on 95% of the purchase price.
Exactly. But, that may be the only way to do it for a lot of people. One thing you should remember about when you get into these, if you're doing an SBA loan, and the difference between SBA and a private money lender, SBA lending is a much slower process. It's going to take you between 60 to 120 days to get that loan done. And that's really about as fast as they can do it. They aren't going to be able to lend on something that's just in really bad shape. Like
you wouldn't have been able to do it on this.
We couldn't have done SBA lending on it. It just wouldn't have worked. It just the building was in too bad a shape. It is an option for some people. I'm just mentioning it because it is an alternative source. But I think in this series of podcasts that we're doing, I think we've covered most of the basics that you want to make sure that you check off your box, check off your boxes before you get into these things. So a recap real quick.
Right. So first thing, identify the building, purchase and sale agreement, title insurance, ALTA, environmental tests, insurance somewhere in there.
Fire and hazard. So we're talking about two different types of insurance, folks. One is title insurance, and one is fire and hazard insurance.
Right. LLC formation, funding the thing.
And then close escrow, and then you're the
escrow.
proud owner of an industrial building or a retail building or whatever you're going to buy. So keep in mind, Pacific West Mortgage Fund is out there if you need a partner, an equity partner. There are alternatives to financing, but I think in this series, Patrick, if we covered those basics, you're going to be in a very strong position to move forward to the next step, which we're going to be covering in later podcasts. And we're going to show you in this series, what we want to show you is what are the beginning steps? What did we go through before we acquired the building? And then we're going to go through the process of, refurbishing the building, getting valuations, and also leasing the building, which is the last step. But
so I'm thinking out loud here. I think the next episode here is probably just going to be on. This was everything up until the close of escrow.
Right.
Next one is going to be talking about the renovations, which we're in
the middle of right now.
And then I guess my hope is probably middle of summer-ish. We'll be seriously starting to look at trying to lease this thing, and then.
Well, and also doing the work. We're going to cover some of the things with the contractors we're working with, how they work, how long it takes to do steps. What are the steps to actually put the thing back together? But today's podcast is really about setting yourself up for success once the escrow closes. If you don't do these steps beforehand, you really can get into trouble later, and that's what we're trying to have you avoid. So, Patrick, thank you so much for joining me. I'm so excited to be working on this project with you and building your real estate fortune early. So it's exciting. It's a lot of work, though, don't you think?
I mean, yeah, it's definitely more than I was expecting, for sure. The amount of moving parts is can feel intimidating, for sure. But it's kind of ultimately it's just a checklist, and you got to go through it. And sometimes it's some parts are easier than others. Some of these you can do in literally an email. Some of them require sitting on the phone for 4 hours. So it just is what it is.
Right. But it's an exciting adventure buying real estate and owning it. It's really the American dream in a lot of respects, and small commercial properties are a step towards financial independence for many, many people. Over the years, I've been practicing real estate now for well over 40 years, and I have found without doubt that most of my clients make far more money on their real estate than they ever did in their businesses. So I'm excited to walk this audience through this process. This is really an exceptional opportunity to kind of go from point A to point Z, which is a fully leased paying income piece of property, and all of the steps, because this property is so badly damaged that we're really going to go through really everything that you're going to have to do.
Pretty much. So,
well, thank you for joining us. Stay tuned for the next episode. We're going to be touching now on the next step, which is starting to put all the pieces back together. Patrick, thank you so much for joining me.
Yeah, thank you very much.
And we look forward to speaking with you soon.